Hi, Michael Glennon from Glennon Capital. This week we're going to talk about banks, credit, the Royal Commission and the implication that has at this point in time for small caps. So one of the things we've noticed is the large banks have really tightened their lending policies. So it's getting a lot more difficult to get a mortgage. Foreign buyers, whether they're residents that are residing overseas or foreign nationals looking for investment properties, that market has dried up quite significantly. That does put pressure on the banks, and we think that'll be coming through in their results. So we're still not favourably disposed to investing in the banks. And the implication that we're seeing that's having for these tighter credit policies for some of the small cap companies is that you've got listed businesses who are providing what is essentially subprime debt. So they're lending to people that the banks won't lend to. So there's now more of these people that the big banks won't lend to. They're looking for credit. And the scary situation is that these small companies are all out there competing to grow their earnings per share, which by default means that they are encouraged to sort of start to loosen their credit policies. So we're cautious that there's a little bit of a bubble forming in small credit providers providing retail finance to people who can't get loans off the big banks. And that's a similar situation to what was happening in the US prior to the GFC. There was a blowout of debt to people that shouldn't have had loans. We're starting to see some of that happening now, and we're very cautious about that. So we think that's going to have implications for the property market, houses, the big bank share price, and we're cautious about having any money deployed into small finance businesses lending to subprime investors on the Australian market. So something to be cautious of, something we're staying away from. Thanks for watching. I'm Michael Glennon.